Every day, traders and investors dive in to tackle the ever-changing markets to find opportunity. Futures Radio Show is your number one source for answers to the questions that all market participants want to ask. Veteran futures trader Anthony Crudele sits down with the most influential leaders and top traders in the industry. Now, here's your host, Anthony Crudele.
What's up, everybody? Anthony Crudele here, and thank you for tuning in for this episode with Trent Smalley. Futures Radio Show is sponsored by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world effectively manage risk. For access to free educational tools and resources for the active individual trader, please visit activetrader.cmegroup.com. Remember, new shows are posted on Mondays and Thursdays. You can subscribe to the show on iTunes, YouTube, Google Podcasts, Spotify, and Stitcher. If you're enjoying the show, please leave a review on iTunes. This show is also sponsored by Trading Technologies, FTSE Russell, and RJO Futures. Today I spoke with chartered market technician Trent Smalley. I've been following Trent for some time on Twitter. He's a young guy in Omaha, Nebraska that has put a lot of time in learning the futures markets before he jumped in and began trading. He decided to go through the CMT, Chartered Market Technician Program. So I wanted to see what the CMT course taught him about markets and how it has helped him develop as a trader. We discussed how he has developed his style of trading, process for technical analysis, and last but not least, we talked about the importance of not crowding your charts and overlapping indicators, and the importance of being honest with yourself as a trader. So without further ado, let me take you right to the interview with Trent. It's great to have you here today. It was funny, we were talking before we started to record today, and you and I actually have a friend that stood right next to me in the pit, in the S&P pit, that you and I both know. And I was thinking to myself, it's such a small world. I kind of wanted to kick off today and how you know Earl and how you got involved in the trading industry.
Absolutely. Yeah. So Earl, maybe the funniest part about this story is me standing next to Earl. He happens to be about 6'8" and I'm 5'9" in shoes. And so I met Earl actually the first time so I started in the business in 2007. I worked for a company called DTN, and a longtime family friend, actually my older brother is 12 years older than me. His best friend growing up ended up trading pork belly futures, which I'm told they're no longer around.
No.
So he traded those at the Merc, and I visited him a couple summers, like 7th and 8th grade for me. And he transitioned away from that and started at a company called DTN. They provide market data for futures, commodity stocks, options, and all that. And he hired me right out of college. So I kind of cut my teeth in the industry early on, working with traders, not knowing anything really. I mean, a degree in college does not prepare you for real world trading or anything like that. But Earl was actually one of probably the first customers I ever helped on the phone. And a lot of these guys used to be real fast with, fast talkers, New York guys, want to keep everything as short as possible. And Earl was always happy to talk to me, and he was interested in, how much I'd learned since I'd been around and stuff like that. And then over the years, as I became kind of his go-to for any market data related or trading platform questions, I would travel to Chicago. I'm located in Omaha. So I traveled to Chicago. I met him out a couple times and I got to know him that way. So we keep up on Facebook and LinkedIn and stuff like that. So whenever I get back to Chicago, I'll definitely invite him out, and maybe you can come in from Florida and we can have a powwow.
It's such a small world. And, Earl was one of the reasons why I had to go to computer trading. I'm 5'11", try standing next to Earl or in front of Earl and turning around and trying to get to a broker when he's 6'8". With massive wingspan. I was like, you know what?
Exactly.
I think I'll go to the screen. So
exactly.
Yeah,
he's a large man.
He is
a large man.
And there was actually he was one of the biggest guys, if not the biggest guy on our side of the pit, but just such a great guy. And I just thought that was so interesting that you actually knew Earl, because like I said, I stood right in front of him for many years. He stood right next to one of my partners, Vince. And Earl's is a great guy. And I'm curious,
sure.
how did you even get involved in futures and DTN? Walk us through that a little bit.
Mm-hmm. Yeah. So my brother's friend, after he left Chicago, he started at DTN, and I was just finishing college, and I had really good grades, and I was all over the place. I thought about medical school for a while. I thought about law school for a while, and I remember my brother set me up as kind of the summer before I was going to graduate, and he said, "Well, go talk to Matt, because he's doing well. He's an executive at DTN, and he's always helped me when I've had questions about career related things." And so I went and I had lunch with Matt, and he's like, "Well, worst comes to worst," he goes, "if I were you," ended up being really good advice at the time because we were about a year before the big downturn. He said, "Don't go out and get an MBA if you don't know what you want to do." He's like, "Get a couple years of experience. I know you personally. I'm willing to vouch for you to come work at DTN in the active trader group. And if you come work for me for a year and you want to leave, fine." But he's like, "Try your hardest, give it a shot. You'll meet some great people, some interesting people." And from there, that was really my initiation into trading. I mean, I started by selling market data to guys who needed data to power platforms like NinjaTrader and Market Delta and multi-charts and all these different compatible software platforms that these people were trading with. And so the coolest thing about that job was not selling market data to people. That's extremely boring. But every single person that you talk to had a different trading style. And these guys love to open up about their strategy. They love to open up about, from an options trader full time to a futures trader to lots and lots of Forex guys over the years. I would just open a notebook, and half the time in those early, year and a half, I didn't know what they were talking about, but I would scribble notes down. Pretty soon, I talked to one guy in New York. I'll never forget his name, and I haven't ever kept up with him probably for 10 years. His name was Tim Bernasconi, and he taught me options. And he sent me this ebook that he kind of put out on options, and that kind of got me hooked, and that's where I started. So I became an options trader probably in 2008 with a small amount of money. I had bought some stocks, bought and held them. In 2008, 2009, when things were everything was totally hitting the wall, I would buy stocks, hold them, forget about them, check back, a month later and see that I'd made all this money. And from there, I kind of learned options after that. And that's a difficult road early on, especially when you're 25. But that's where it all kind of started for me.
You know what I love about your story so far is that you crawled into the business. You learned the backbones first. You didn't just jump in and start trading. You learned about markets. You talked to other traders, and I think that too many people rush into this business and basically just open up an account and just start trading without going through the process. Now, not everybody has to go get a job in the industry, but I just love the fact that you as a young guy were able to really just take your time with it. And one of the big reasons why I wanted to have you on the show today was obviously learn about your background and things like that. But I saw a while back that you had posted, "Hey, I finished my CMT," and you could sense that there was that moment of pride for you, achieving that and getting that done.
For sure.
So I want to talk to you about your journey. We already know that you took your time learning the industry, then you started to trade a little bit, and then you make the decision to get your CMT. Why?
Yeah. So the CMT basically came after what I would call a misstep in a direction for me that wasn't right for me. 100% not a misstep for thousands and thousands of people. And that was, I started with the first level, the CFA, because I was trying to learn this industry from talking to all these traders every day and, going through the financial crisis and all these smart people were talking. I would go home every day and watch CNBC, and I could make out some of what they were talking about, but I didn't, know for sure. And I had some friends. Being in Omaha, we have headquarters is TD Ameritrade. Lots of friends in the brokerage industry. So we'd go out for happy hour after work, and we'd always talk markets. And they were like, "Oh, well, if you want to learn for real, you've got to get your CFA. It's the hardest thing out there to do. It's going to give you everything you need. So I do level 1 of this, and then I talk to these traders, and none of these traders are mentioning anything that I learned in the CFA, which was CFA level 1 was basically like taking a finance degree all jammed into like 1 year. And so it didn't really get me to where I wanted to go, which was trading. And so one of our partners through DTN used to be called Market Analyst. It's now called Optima Software. The CEO and owner, founder of Optima Software, longtime mentor of mine is Matthew Verdow. And you've probably seen he's done talks with portfolio management, and he usually talks at the CMT symposium every year. So I made a trip to New York City, and every year, like in February or March, they did the New York Traders Expo. And he was out there, so I met him the first time. And I had talked to him. I had sat down in like the lobby of the Marriott where it was held for 15 years running or something. And he said, you know what's opened up more doors for me? And he got out his business card, and it had CMT after it. He's like, if I were you, just with this conversation we had, I would start down this path. And he said, don't feel stressed. He goes, take your time with the material. And this was right after they had transitioned from being kind of used to have to buy all these separate books for the CMT program, like 9 different books for each level. And they were all these technical analysis books. And I was like, this just doesn't seem very organized. He said, the great news about this is Wiley just made a condensed version of all of those different books, which you can buy as a study program. And so I think I went back to my hotel that night after that conversation, after we'd had a couple drinks, and I went and I just registered for the program right there. And that's kind of where it all started.
You said your goal was to get involved in trading, and you felt that the CMT was going to be a pathway to helping you become a trader. What did the CMT teach you?
Yeah, so the CMT, going into it, I probably had, kind of a misrepresentation in my mind of what it really was. And I thought it was studying classical chart patterns, super basic, stuff like that. What the CMT teaches really is being able to design a portfolio, risk management, more risk management on top of that, and then how to design a strategy of money management that helps you no matter what you trade, whether it's stocks, whether you're a portfolio manager, a long-only equity fund, whether you're a futures trader. It touches on all these different topics that it doesn't matter what, like I said, if you're a classical technical analyst with chart patterns, if you're somebody who relies heavily on indicators, if you are more of a market profile connoisseur, it touches on level 1, kind of touches on all these different aspects of technical analysis, Elliott wave. But it gives you that first level, gives you kind of a big overview of, look, you're a futures trader. You're probably going to want to focus maybe on volume profile or market profile. Maybe indicators like VWAP, basic moving averages can help you. And so it doesn't matter what you trade. If there is price and there's volume, the CMT program will certainly help you with that. And that first level kind of just is that breakthrough into introducing you to all these different ways within kind of the overarching technical analysis that you can manage money and manage your risk.
What I find interesting about this is that you went that route for the CMT to help you with your trading. And
Yep.
so many other people, I think, they really don't even consider that route, and they end up going to educators instead. I'm curious as to how the CMT program actually helped you become a better trader.
Yeah, so that's a great question. I was in at least one kind of educator type trading room before and during, actually, when I was going through the CMT program. And it was kind of funny because people would be like, why do you need that? That's kind of, theoretical. It's overkill. It's too much. But there's no way for me personally that I would have studied that hard and gone to that level of understanding of the material without signing up for this program. I mean, it's not like it's overly expensive, but if you're going to spend a couple $1,000s per level trying to find your way through this, and if you're a person that doesn't like to fail, you don't want to sign up for an exam and all your family and friends are asking you, what are you studying for? And then you go fail it. So you put yourself through this and you want to come out with a passing grade. And if I wouldn't have signed up for that, I would not have understood, kind of the necessity of a proper risk management approach. Before this, I was, on the average, I was gambling. I mean, I guess one could make the point that you're always gambling when you're trading, but I'm gambling with an edge, and that's knowing where I'm wrong before I get in, where my profit target might be, whether it's a futures contract or options or a stock position or whatever. And I wouldn't have known those things had I not kind of put myself through the gauntlet that's the CMT program. I know I sound like I'm a paid shill for the CMT. I'm certainly not. I get nothing for pitching it. But without that, for me, I probably would have gone through trading account after trading account because I was just, shooting from the hip without it. And it gave me the background and the basis I needed to be able to understand that you really should think about what you stand to lose before you think about what you stand to gain in any of this. And I've seen a lot of, traders over the years that have unfortunately gone the other way because they didn't understand the risk.
Hey everybody, a quick pause here to talk about FTSE Russell. They are a leading global provider of benchmarks, analytics, and data solutions. The Russell 2000 Index is a key benchmark for small-cap U.S. stocks. Be sure to check out the E-Mini Russell 2000 Index Futures contract, symbol RTY. For more information on FTSE Russell and their products, please visit FTSERussell.com. I know that Earl would be happy to hear you say, where you're wrong before you're getting in. I would for sure. And Earl and I actually had the same mentor, Mickey Hoffman, and that was actually the first thing that we learned on the trading floor. And
it's great.
I want to go back to what you got out of the CMT and how it made you a better trader. I mean, there's two things that it really stuck out to me in your explanation of what you got from the course. And you said it was design and risk management. And so for me, what I'm thinking is because you're in this program, I think versus going to an educator, your mind is actually able to, I think, develop your own style, your own design. You're learning risk management. And I think that this could be something that could be more helpful to a trader who's beginning their career, find their way, versus learning what someone else is telling them. What works for them, because you're developing your own style. I think you're seeing all of these different indicators and tools out there that you're actually able to develop your own style. Do you agree with that?
I do. The biggest difference to me with the trading room, and I've had some good experiences in trading rooms over the year. I've had some bad ones, but if you're in a trading room, you always have a moderator, somebody who owns the service, somebody you pay a subscription fee to, and you're always kind of reliant upon them to come with the setups. You're always kind of able to pass it off on losing trades like, he had a bad week, so I had a bad week. He had a bad trade, so I had a bad trade. He had conviction in this one name, so I doubled down or added to it, and it went against me even further. Pair that with the fact that most of these trading rooms, if they're there's 50 or 100 people in there, there's comments all day, every day. So I don't know about you, but if you're in there, I have an extremely high risk tolerance. I am not scared to put on any trade. I will be in, when I was younger, I would be in 50 at once.
Same here.
And I never was the person scared to pull the trigger. I was the person with extreme FOMO when I saw other people making money in the room. And you have to understand that some guys in those rooms have been doing it for 50 years, have $1 million accounts, and you start out with 10 grand and they're putting on 25 contracts or whatever. You're like, well, maybe I'll just up my ante here because Jim in the trading room, who used to work for Goldman Sachs, who's got millions of dollars, the risk management is totally different. And when you break away from those educators' rooms, first you have to be, you have to understand that these guys are getting paid a subscription every month, which means that invariably they're trading your money. I mean, and I'm not talking about any specific person out there or talking bad. I learned a lot from trading rooms. But until you understand that this is your money, that guy's not going to send you your losses back. There's no mulligan. So FOMO is probably the thing that hurt me the most in those rooms, whereas the CMT program told me to slow down. Is this really your pitch? Because if you threw me 100 pitches, I would swing at 90 of them. And once I got through the first level or two of the CMT program, I would swing at 5. So I really learned to look for what worked for me, for my risk appetite, for my account size. Some people shouldn't be trading futures at all if they have a $5,000 account. I mean, it is devastatingly hard to make money if you're underfunded in some asset classes. And I'd learned that the hard way. I mean, I went through probably a $10,000 to $15,000 account in futures in record time back in the day because I was following some guy in a trading room that when he had a bad day, I had a bad day. And so really at the end of the day there, I learned that I'm following somebody else. When he has bad weeks, that means I have to have bad weeks. And it didn't work for me in the end. And I think the CMT program probably turned a lot of that around quickly.
Yeah, and it's not that I'm knocking educators at all. I think that there's so many great trading rooms out there that are very beneficial to a trader's growth. What I'm talking about is that beginning phase. When I started on the floor of CME, we had to go through and actually take a class to become a clerk. Okay, we actually had a handbook, which I still have. I look back and I got that book in 1995, and I was going through it the other day, and I'm like, this is such a great resource that traders really need to have that initial step to be able to grow into their own, because at that beginning moment, you're really fragile. And if you go into a trading room, just for the reasons that you had said, that you're around all these professionals, you don't understand lingo, you don't understand some of this technical analysis that they're talking about. You haven't gotten on any solid footing to be able to go in there and actually block some of the noise and take really the good and actually block up some of what maybe the bad may be. I mean, that's really more of what I'm talking about, because I think that there's too many new traders uneducated on the basics of trading before they begin to trade. And just hearing, going back to what I'd said about you originally, was that you crawled your way into this business and then you decided to go and get the CMT. And obviously for you, it's been really a great path because you've found your footing in this industry and you've had success. And I want to talk about the next phase. Okay. We talked about your background. You went through the CMT. We talked about some of the things that you learned in there. Now talk about that phase following it. What are some of the things that you took from getting your CMT that you now are using in your everyday trading?
So the easiest way to answer that question is I sampled a lot of different things. When I came away from the CMT program in the beginning, and I like to tell people, it really was kind of, while it was very comprehensive, it almost kind of set me on a path of wanting to learn more about these individual areas. So I think the first book I read right after the CMT program was a book called Dynamic Trading by Robert Miner, which is a good friend of mine. Todd Gordon is an Elliott Wave expert. he had recommended me this book one summer, and it took me most of the summer to read it. So I started down the path kind of Elliott Wave in using that in order to forecast targets for individual like stock positions that I was managing. So that was kind of one way. The second book I read was Mind Over Markets by Jim Dalton. And probably a lot of futures traders out there that subscribe to auction theory, that's probably one of their Bibles, I would assume. So that is under technical analysis, but it is 100% different than Elliott Wave. So I kind of had depending upon what I trade, what kind of market environment we're in, I sample from these different areas of technicals, whether it's Elliott Wave, whether it is my go-to has always and probably will always be what I've always used is volume profile analysis. Another friend of mine, Futures Trader 71, Morad Askar, another one of the first people I ever met in this business. He helped me with a lot of the auction theory, market profile in the early days, all the different day types, what to expect when this happens, if this happens, and so my futures trading approach was always kind of based on that. So I guess the answer is, depending upon what I'm trading, what I'm doing, it could be that I use so many different things that I'm kind of a chameleon that way. And my system's always evolving. And it's always a work in progress. And I'm always reading. I have 2 or 3 trading books on my desk pretty much at all times. So I think, I guess the short answer to the question is, from the CMT program, it was not in any way the end of my education. It was maybe more of the beginning, because from those books, you get samples, you get 3 or 4 chapters put together from one author that is all quantitative theory, one guy that's only into volatility and the VIX and studies of that, one guy that's only a classical chartist, and then one guy who is an Elliott Wave expert and auction profile theorist. So there's just so many different things that you learn that it was able to kind of show me the way into learn, taking the stepping stone and going out and learning that new theory or that new way that I thought I could incorporate to my plan.
Well, you named 2 guys that are perfect examples of people that have great trading rooms, Jim and Morad. You know that I know both of them. Yep. They're both friends. And just going back to what I had said about you and the growth of you as a trader, those are 2 guys where they are true professionals. They have done so much to help the trading industry out. And I would bet that both of them would say, get some education on markets before you probably come to our stuff, because those guys are talking at a level that they've been doing this for so long that when you go in there, you want to have some, solid footing, like I had mentioned.
Yeah. When I opened that Dalton book the first time, I was like, oh, okay, so I don't know what I'm doing. And it's just because it's a totally different approach than I had ever been introduced to. And that, I think a lot of people find that when they get into another guy who's a kind of a protege of Dalton is Shadow Trader, Peter Reznичek. I've watched his videos, have his morning letter. If I'm ever going to enter a futures trade, he's another guy that I rely, because he just has so much more. Don't ever be afraid of these guys that have so much more experience than you, especially if you really are willing to put in the work and willing to learn. Morad, number 1. Peter, 2. They will spend time with you. They will try to make things clear. And I've just been lucky to, like I said, that job at DTN introduced me to some really good people along the way. And some of these guys were some of them.
Let's have a little fun here. Let's walk us through a market. Let's use the E-Mini S&P. It's a market I trade on a regular basis. And if you're going to sit down and analyze that market, talk to us about the indicators that you'd be using. Just walk us through your entire process.
Sure. So on something like on the ES, I'm going to have multiple time frames that I'm watching. It starts with the daily time frame, and that basically has Fibonacci retracements. So I'm looking at the ES right now, and I look at the top that we made back in mid to late February, down to the bottom that we made in late March, and where we are now from there. I mean, what I have on my screen is I've got Fibonacci retracements. So we've basically neared on the ES up towards, a 61.8 Fibonacci retracement of that entire route that we all got to be a part of. So I have that on there. I have volume profile, which I use to basically gauge support and resistance levels. I did a blog about this a week or so ago, and I said, you're going to have to give this market some time here because we bounced pretty quick, pretty fast, and we're nearing those levels where there's just some natural resistance above. I mean, if you were unlucky and you bought in and, the market went against you so far, you're just praying for it to come up so you can get out, so you can break even. So you've got to deal with all that overhead supply right there. So that's kind of on the daily. So I have an idea where we may or may not go, where it's going to be tough to jump through, where I would look to, get long and with a stop below. And then from there, basically I get down to an hourly chart. And with the hourly chart, it's a lot of the same. I don't do a whole lot of Fibonacci on intraday. That is basically just for the daily, weekly, monthly time frames. But I always use volume profile. It's always there. And then on my intraday charts, I'll often have a VWAP or I don't know if you guys follow. Brian Shannon has an anchored VWAP study that I'll use, and just points of interest. So maybe an anchored VWAP from the absolute bottom and where we've gone since then. So I always know I'll have a couple areas before me, and I like to look for confluence, whether that's some short-term EMAs, some high volume nodes, and I like to see a lot of things under me where I'm going to be sure that I'm wrong if price were to break those levels. I want to know where I'm wrong before I ever take this trade, because if I don't know, then I'm basically subjecting myself to more risk than I can take. So I want to skew the risk reward in my favor. I want to get in a place where I know, let's say 10 points below me, I'm wrong, but I think there's 20 to 25 or 30 points above if I'm long. So I have that skewed in my favor. Now, if I'm wrong and it goes against me, fine, that's part of the game. But I've got to know I want multiple layers of resist or support below me if I'm getting long, or resistance above me if I'm getting short. But I want to have those areas of confluence where I can say, all right, I know I'm wrong if price breaks here. No matter if it's liquidation break, some news comes out, whatever, I'm wrong, I'm out. So it's always volume profile. It's oftentimes VWAP, a couple different EMAs that are usually based on Fibonacci numbers, 8, 21, 34. I just try to use those few things when trading futures, just to kind of skew the risk reward in my favor.
Hey everybody, I want to take a quick pause and talk about RJO Futures. They are a long-standing brokerage firm with personal broker relationships to learn, discuss, and trade the futures markets. To learn more about RJO Futures, please visit rjofutures.com. So thank you for sharing that with us. It's a simple process.
Yep.
And my question is, why is that the route that you chose for your analysis? I mean, you went through all these different indicators and those are the ones you chose. Why those?
I would say when I'm doing this for my own futures account, I have to take into account, I cannot let, it depends on your account size. Now, if it's client money, like my partner, Ryan Morris at Jersey Shore Portfolio Management and his CTA, he's managing money. He does this differently. He does it based on long-term trends. He can afford to take a $5,000 loss. I don't want to take a $5,000 loss on my own retail trading account. So I have to have an approach that works for me. And this one, I feel like, well, I am going to get, some days I'm going to get cut to death, but I'm never going to take kind of one of those huge gunshot wounds that's going to take me a long time to recuperate. This particular formula, when I got into futures trading and I started to learn profile from Dalton and Peter and Morad, I was the one it was almost opposite of my stock trading and option trading, in that I was Mr. Analysis Paralysis. I would have so many damn indicators on the chart that I would never put a trade on. And one person told me that one time. He's like, man, you look for perfection when putting on a futures trade. You're going to sit here all week. And I think I did one time. I sat there all week waiting for a trade. Nothing set up perfectly for me, so I didn't do anything the whole week. He's like, you got to loosen up some of these rules, or you're never going to get in anything. So that's kind of been the approach that's worked for a retail size trading account. And that's what I stick with. Just trying to skew that risk reward in my favor to where my losses are going to be limited. My gains have some room to run.
Something that I did in my strategy was, I don't want to use the word diversify with indicators, but I didn't have indicators that were the same, right? So I basically, I have support and resistance. I use Bollinger Bands. I have one divergence indicator, actually two. I have a stochastic and a MACD. And then really just I have one moving average that I look at. And I guess the one thing that I tried to do was just not crowd my screen with too much of basically something that would give me almost the same indication. Did you go about it that way too?
The funny thing about the CMT program is you will learn every indicator out there. You'll learn how to calculate a lot of them by hand. So I was fluent in every indicator out there. And I think when I went around and I sampled the different ones, one that you might use that's hugely effective if you're a trend follower, you've read the Michael Covell books and you're into trend following, is the ADX, or the average directional index. If you're managing a bigger account, you can rely on a trend following indicator like that. So yeah, your style of having, maybe you've got a trend following indicator, maybe you have a support and resistance, you have an oscillator on there. It's good not to overlap. I'm a big fan of keeping charts as clean and clear as possible. I see some things shared sometimes and I'm like, I spend some time on Twitter, and for the life of me, most of the time I can't read other people's technical analysis. People share charts. I'm like, I have no idea what this is is this long? Is this short? What are we doing?
Yeah.
There's so many indicators. There's so many colors. I'm just lost. I'm like, what is that? So you have to make it your own for sure. If you have a good mentor, that can kind of show you the ropes and set up your charts for you and teach you what to watch every day, that's very, very helpful for sure. But don't get stuck like I did, especially in futures with so many levels of watching 10 different time frames and 5 different indicators. I mean, your head's going to hurt before you ever get in anything. So.
Yeah. And I, like, for me, I actually did a video and actually a podcast talking about this the other day, where I'm keeping things super simple now. The busier it gets, I mean, I typically only look at 2 charts on a regular basis anyway, and I will modify them based upon the volatility. And because we've been so volatile, I've actually moved down to like 1,000 tick chart as my shorter term one.
Yep.
Just because normally I was looking at a 5 minute, and it just is, it's the levels are too wide for everything that, that I'm getting. So I took it down a little bit, but that was going to be like the next question I have for you. Is this something that you are modifying through different times of volatility? Are you keeping the same process for all futures markets? Talk to us about that a little bit.
Absolutely. Yeah. So this kind of the unprecedented last month and a half that we've had has been a time where straight up, there's a lot of times when I just don't feel comfortable in a trade. In March, I don't think I took a single futures trade in March. I relied on selling some option premium, trying to get into some quality stocks that I'd been looking at that I felt had run away from me. But I could not get a hand. I mean, the futures market was just moving so fast that I was a little bit worried about the technology behind everything. Bro, you heard about stuff like Robinhood going down, and while everything I have has been really solid, delays in market data, the internet not being able to keep up, whatever it is, things were just moving so fast. I personally wasn't comfortable. Some people were, and some people probably made a lot of money in that environment. But I am more, strangely enough, and it's probably because I haven't traded futures as much as some. But those days when you've got 50, 80 point ES swings, I'm like, okay, this is maybe this is a pros ball game. Maybe this is, even though I've been doing this for, a decade or more, maybe this isn't my game. I used to trade crude futures, and I was like, there is no way in the past week I would have anything anywhere near there. And you have to know what environment works for your system, for your risk appetite. And if you're uncomfortable with it, stay away. I mean, I've never been able to do much with paper trading. I always had to have some money on the line. One thing that I did do, so I did place a couple futures trades in March, and they were the micros, just to kind of get your feet wet, trying to trade in an environment which we haven't had in years. And you kind of get used to those 15, 20 point ES days. Some guys hate them. If I can make 4 or 5 points here and there on a couple contracts, I'm happy. But these 50, 80, 100 point swing days, I'm just like, okay, what I stand to lose here probably, strips away the gains that I could potentially get. And I don't want a catastrophic loss at this point in my career. I've been doing this too long. So those are the things I try to avoid. So I definitely, my system does change around volatility levels. If we're in a VIX 15 versus a VIX 60, chances are you'll see me on the sidelines or trading micros in the 60 or 70 environment. That makes me a wimp, so be it. There's other things I can do, but I just didn't feel comfortable at all on those huge days. Hopefully a lot of people made some money doing it.
Look, I'm using micros, man, and I've been trading for over 20 years, and I can tell you
good
that
to hear.
One thing I learned early in my career, and I'll share a quick story, is I came off the floor. I was a little bit pissed off because I'd only made X amount. I don't want to say how much it is because the point of the matter was it was less than what I had been making, and I was kind of had my head down, and one of the veteran traders walked by me, and he's like, what's the matter, Anthony? I said, I only made X amount today. He basically grabbed me and said, you never are too good to make anything. And it just was like, here's a guy who's made a ton of money in the industry, and he just put me in my place. And I was like, I got to the point where I was doing really well, and then you get caught up, and other people were making a lot of money, more money, and I wasn't doing as well as I thought that I should have been. And actually, he saved me from going probably into a really big drawdown. And I'll never forget that moment, because I was like, you know what? You always have to be true to who you are and where you are. There's self-awareness is a huge part of this business. And when I saw some of these moves last month, I opened up a micro account in March, and I just wanted to start being able to put some positions on that I was really looking at on the regular E-Minis and saying, man, my stop is so wide. I might just have to stay away from this trade, or I have to really wait for price to get close to my stop for me to get in. And I said, you know what? Let me take a look at these micros. And it's really been good for me, because I'm able to, in those moments where I look at these trades, I can work my way into the market slower, and it's been beneficial to me. And I always say, be yourself, man. Be who you are. The goal is to make money, and that's all that matters, right? And really all the stuff that we talked about today, how you crawled your way into trading, you went through the process. And what I really loved about our conversation today was that you've just stayed true to yourself, and I think that that's so important in this industry. And I really commend you for that.
I trade with, last summer, super slow summer. I traded with a couple guys, good friends of mine, that started a very small micro account, like $3,000-$4,000. A lot of people laugh at that. These guys I would probably put up against a lot of futures traders. It does not matter your account. It matters your account size so far as what you trade, what contracts you can trade. But these guys were longtime futures traders, and in some ways they were redoing a system for super low volatility environments. What the micros allowed them to do was scale in and out, so they could buy 3 or 5 contracts. They could add if the market started going in their direction, and they could take off as it would go against them. But the account size doesn't matter. There's a lot of people out there with millions and millions of dollars. That's fine. Doesn't mean they're good. It really does not mean they're good. A couple guys I've traded with along the way had tiny options accounts. I've seen them double and triple these accounts over time. Some of the best traders I know started very, very small. And it's funny because they'll get to a level where maybe they start an account with 10 grand and this account becomes 20, 25. It starts to play with your mind once you get bigger and you see these swings in your account. I've never managed institutional money. I've never seen $1 million swing day to day. Maybe you get used to that, but I have a feeling that I've talked to a lot of people who have gotten to that a certain threshold, and it influences their trading because they see those account swings. And it's not good to watch your P&L all day, but that will mess with the trader's mind when you see so much money hanging out there that I'm sure maybe over time you kind of get used to it. You get immune, but for a lot of people, I don't think they do. So it's always good to keep in mind kind of who you are, your account size, what you need to do with that money. If you need it to make a house payment next month, you better not be letting your account go 50 ES points against you, depending upon the size. So it's all good information.
Yeah, I mean, one thing I've learned over the course of my career is that, and I know I'm going to say this again, and it maybe sounds redundant, but you just really have to be who you are. And
right.
I went from a guy who was scalping small to scalping big, making a lot of money to then giving a lot of it back. And then the adjustment is difficult both ways. It's difficult to get bigger and to take bigger swings. And then when you go from that, you get used to that. Then it's difficult to take less. And I have learned that if I'm not comfortable with where I'm at in that moment, then I'm trading too much. I'm trading too big. And then you work your way back. It is not a straight uphill, business. There's going to be ebbs and flows. And if you just stay grounded and true to who you are as things are happening, you really do prevent yourself from those blow up times because you're willing to accept where you are at that moment. And that's a big thing for me. And I've learned to really just truly accept where I'm at and what I could deal with at any given time. But great conversation, my friend. We are not done yet. I want to move on to rapid fire questions if you're ready for those.
Sure, I'm ready.
All right, everybody. Our rapid fire segment is sponsored by Trading Technologies. Trade the global markets with TT. They are the world's fastest commercially available futures trading platform. Now with integrated tools for advanced options trading, cryptocurrencies, and trade surveillance. You can try it now for free at tryttnow.com. Trent, first question for you. What trader has influenced your life the most and why?
I have to give that one probably to Jeff Kohler, Kohler Capital Management. I was in his room for probably 4 or 5 years. And the one thing he did for me was I was going through the CMT program at the time. So I was under that analysis paralysis spell that I talked about before. And so he was able to kind of branch, get me out of that theoretical environment where everything had to be perfect by the book into a less than theoretical approach that I could use to try to make real world money. And he was kind of good at getting me away from just the by the book and getting me out into the real world. So I owe a lot of that to him.
What was the hardest thing for you to overcome in trading?
My risk tolerance. For me, I had to slow down. A lot of people are the exact opposite. They're super conservative with their money. I was always out there swinging for fences early on. And so I had to make myself understand that if you're trying to get rich fast, you're going to fail over and over and over. And so I had to make myself understand that the market's open every day. The market's open 250 plus days a year. If you make X amount a day, you're going to make X amount per year. And so it was getting over that. I got to make money every single day, and I got to make it fast because I want to get rich by May. That was the thing that probably hurt me the most in the early years.
How has your trading process evolved over the years?
Much more focused on risk management now. I understand where I'm wrong before I put any trade on. I try not to think of the potential profits. I try to think, not that I'm thinking pessimistically, but I try at any one time in a portfolio, whether it's an options portfolio, stocks, a futures, contract trade, I have to know exactly where I am going to get out no matter what. There's none of this sitting around and waiting. Oh, maybe it'll come back. Maybe let's wait for this. No, I'm wrong. I know exactly where I'm wrong. It's set in stone before I jump in anything.
What is one attribute you believe every trader should have?
That's easy. Humility. I was the exact opposite. When I started, I had none. I was used to being a smart kid in school. I was used to having a lot of success in other things. The market doesn't care. It'll take your money no matter if you're smart, no matter if you have all the conviction in the world. You've got to have a level of humility to know that, all right, I'm tapping out here. I'll get them next time. I'm wrong. And it took me a long time to learn that.
Favorite book about trading?
I've got two of them. The first one, I needed a fundamental background in managing a stock portfolio. I got that with How to Make Money in Stocks by William O'Neill. It's probably been read by tons of people out there. And then Van K. Tharp wrote a book called Trade Your Way to Financial Freedom that John Borman recommended on a podcast years ago. I picked that up actually just last year. It taught in-depth position sizing rules, and that you can actually stock, future, whatever it is, you could throw any trade out there. If your position size wrong, your chances statistically of losing over time are huge. So you have to understand position sizing, your account size, and how that all plays into it.
What's the best piece of advice you received about trading?
This just came from a video that right after we scheduled this podcast, I wanted to say this because it was one of the coolest things I've heard in a long time. And this is Peter Reznicek's Shadow Trader uploads a YouTube video every week. He said this in quotes: the reason that fundamental investors have to have such a long time frame is because their timing is often so horrendous, and that price action often doesn't care one iota about fundamentals. He was talking about some trades that he put on in some of the cruise lines, and he had a whole bunch of people write in and say, well, actually, the balance sheet of this is terrible and the fundamentals are awful, so actually these are going to go bankrupt. And he was explaining price action and how it works. And I thought that was really good information that's brand new, just a couple weeks ago.
If you could give the younger you a piece of advice, what would it be?
Slow down. There's 252 market sessions in every calendar year, give or take a couple. If you want to do this full time, you're making $200 a day on average, that's 50,000. You're making 400, that's 100. $400 a day when you jump into the market, you feel like, there's some guy out there that made $1 million today. So I just, really start swinging for the fences. You will fail like I did early on. And you want to keep that P&L pointed from the bottom left to the upper right. So just slow down, understand the risk, understand that you have time. You do not have to kill it every single day.
If you had to pick a profession other than trading, what would it be?
Oh, that's interesting. I probably would have to say, honestly, I can't even envision my life outside of doing what I do. So I don't know, being a talking head on CNBC about markets, that's kind of a cop-out answer, but something to do with markets. Maybe I'd be a trading educator. Maybe I would be, a columnist for Forbes or something like that. But it has to be something around economics, finance, the markets.
If you had an elevator pitch me your edge in trading, what would you say?
So being an investment advisor, I took a very different route, as we've kind of touched on the way into this business. A lot of people start on the phone, Series 7, they sell mutual funds or commission-based stuff. I never started that way. I started by, and still do, sit in front of the screen from open to close and then some every single day. So my edge is just thousands of hours of screen time. Trialing, testing, CMT program, mentorships, trial and error over the years. So I have the real world experience that most people, that aren't traders first are going to have.
Last question for today. Favorite thing to do when you're not trading?
I'm kind of an exerciseaholic. I love to lift weights. I've got a gym partner. We go to the gym almost every day. We have not been able to in the last 6 weeks, and it is killing me. Not a fan so far of the at-home workouts. I do go outside and I run and stuff like that. And then one thing that I always try to bring up to traders is some form of meditation. You don't have to be super regular with it, but I think in this business, we forget that your mind is a tool, just like your heart, just like your muscles, just like everything else. And our central nervous system is burdened all the time. If you're trading, if you're managing money, there's a lot of pressure involved. And I learned transcendental meditation, I think it's been 4 years ago. And it's a great way to kind of reset your mind every day or twice a day, whenever you do it. And it's been a key part of all this, because by the end of the week, I was so burnt out before that I didn't even want to go out and talk to friends. So meditation's been very, very helpful in my case.
Same here with both of those, man. I love to work out and I love meditation.
Good.
Trent, where can people find you on Twitter, and give us a website to check out?
Sure. So my website's been around for several years. I just blog about markets for fun. I don't have anything to sell you there. It's omahacharts.com, and I am at Omaha Charts on Twitter. So you can reach out to me anytime. Trent at Omaha Charts is my email. If you have any questions about trading, just want to talk trading, I get DMs all the time, and I end up calling people and we just talk about markets. So always open.
Trent, this was a lot of fun, my friend. Thank you so much for joining me on Futures Radio Show today.
Thanks for having me. This was a lot of fun.
Thank you for listening to Futures Radio Show. If you enjoyed the show, please leave a review on iTunes. You can listen to all of our episodes on futuresradioshow.com, iTunes, YouTube, Google Podcasts, Spotify, and Stitcher.